morning, everyone. Thanks for being here. I'd like to welcome Andy Rear, Chief Executive of Munich Re Digital Partners. Thanks for joining me.
Thank you.
So Munich Re, for those who may not know, is the world's biggest reinsurer, which is a reinsurer is an insurer for insurance companies. And it was founded actually in 1880. I just looked this up. So, I think to start, tell me, what is a 139-year-old company doing at a conference for startups?
I suppose what Munich Re is a huge global insurance organization involved in everything. So we're a big reinsurer. We are, the largest reinsurer in pretty much every country in the world. We're the reinsurer behind the Mongolian National Insurance Company. I found that out when I ran that business for a while. We have a big primary insurance operation in multiple countries. So eventually, if it's going on insurance, Munich Re wants to be in it. What we saw back in 2016 when we started Digital Partners was that InsurTech was coming. It was going to be big and different. We could see already that this was going to be our dot-com boom, and we thought we needed to be in it, and we needed to be in it in a big way because Munich Re does do things in a big way.
So then give us the overview of Digital Partners. You said last year you wrote about $100 million in premium.
Yes, so we are growing at a couple of 100% a year, which there are not many insurance businesses that can say that. It's the first time in my career. What we do is we back InsurTech MGAs and some other digital propositions from some larger companies. We back them, first of all, with Munich Re's capacity in multiple different countries, with technology expertise. So we're not developers, but we do know what it takes to build an insurance company. So we help them understand what they need to do to build something that's compliant, that works for customers, and so on. We provide product and underwriting expertise. And Munich Re, being big, has a willingness to experiment with its balance sheet, so a lot of our underwriting is experimental. And then finally, we invest in them through our partners at Munich Re Ventures. So we provide really a one-stop shop to help InsurTech MGAs grow.
And just to break this down, MGA is?
Oh, sorry, managing general agent. So I think this is one of our sort of theses about the way the world of insurance works. If you look at how the industry is organized at the moment, you have brokers, agents at one end who own the customer relationship more or less 100%, own some of the technology, but really not much of the technology that's actually used to manage that customer relationship, because most of that's offered by the insurer. So then you have the insurer who sort of takes over the customer relationship and makes a mess of it on behalf of the agent sometimes. The insurer then provides the insurance product, the regulated balance sheet, some of the capital, and then you have the reinsurer on the backs providing all of the capital. I think if you were God and you were saying, let's design this industry from scratch, you wouldn't do that. It doesn't really make any logical sense. If you were designing the industry from scratch today, I think you would say, well, you need an entity up front which owns the customer, has all of the product, all of the proposition, all of the technology to support that product and proposition. So the customer can go to one place and say, this is how I get insurance. So you go to Hippo, you get Hippo's homeowner insurance, and it just looks and feels like Hippo. And there's nobody else behind that. And then what you have behind that is capital. So our sense is where the InsurTech world is moving to is that there are basically going to be two groups. There are going to be InsurTech MGAs who own propositions, own their own brand, and then behind them there will be capital.
And so the list of companies that you're providing that capital for, you mentioned Hippo, there's also Trove, Next, and Broker. It's about 20 companies. So looking at kind of this group of startups that you've decided to work with, and then, as we discussed, this old, large, kind of established insurance company, what would you say is the biggest mistake that you or that Munich Re has made kind of in venturing into this startup world?
We've made so many. I actually still have the original plan. It wasn't really a business plan. It's It's about 5 pages long, which I presented to the Munich Re board when we had the idea of digital partners, and almost everything turned out to be untrue. But one of the first things, our first idea was we thought we could build the policy admin technology, because some of that's really a commodity, and we thought we'll build that for these startups. And I remember sitting in a meeting with Guy Goldstein, the founder of Next Insurance, and we were telling him what he needed to do to build a policy admin system. And I was trying to suggest that we would build it for him. And I'm thinking, I'm looking at a guy who builds tech. He's an engineer. He has a team in Israel of engineers. They're brilliant. They've done multiple exits before. And I'm thinking, and I'm seriously going to tell these guys how to build technology? And honestly, we went down that road for, I think, about 8 months before we woke up and thought, that's just really dumb to try and build technology for technology companies. And actually, so what we do now is we sit back, we know all of the vendors, we know who's capable of doing what, and we know what needs to be built. So we sit down with our partners and we say, okay, so if you want to go live, you need this stack. Here are the places you should get it from. You shouldn't do this. If you want to go and build this yourself, then you need to get A, B, and C right, and this is what we need to test. And if we just done that at the start, we'd have got Next into the market 8 months quicker than we did eventually.
So then on the flip side, what are the biggest mistakes that the insurtech companies make when they come to work with you?
The thing that irritates me most is the ones that think it's easy. They sort of, insurers are crap. We can do this much better. How hard can it be? The reality is actually insurers are pretty good. They're doing something that's very, very difficult. It's very long term, so anything long term creates legacy. So it's actually a very complicated business. And even if you're building something clean and from scratch, it's such a tightly regulated industry that you can find yourself in difficulties. So another of our partners, I'm not going to name them, but they went live a couple of years ago. They sold 7 policies on their first day. The total premium for those 7 policies was $0.00 because they'd got some kind of bug in their policy admin system. In some markets, just charging your policyholder $0 is actually okay. In the US, in the lines there, in personal lines, that's a disaster already. You have already got a regulatory catastrophe. Thankfully, it was only 7 policies, and we could write out to the individual 7 policyholders and say, we got your premium wrong. It should have been $225, but we'll keep it at 0. But that kind of thing, realizing that something like that is a serious issue and not just it's a startup thing, things happen. That's the thing that's most important.
So how do you vet companies that are coming to you and hoping to partner? What are you looking for in the partners that you choose?
A lot the same as what a venture capital firm would look at. So it has to be the right team. They have to have the ability to build the technology. They have to have distribution expertise. Insurance is an expensive and difficult game for distribution. Behind that, we look for people who've got some kind of underwriting or product angle. It doesn't necessarily need to be a specific expertise. They've got actually often not having insurance expertise can be better, but they need to have an obsession with using data or doing something differently. A relationship with Uber or Lyft and a desire to use their data to price insurance better. A desire to, like Hippo do, to instead of ask the customer a load of questions they don't understand, to actually find that data from outside. A desire like Next do to find new ways of underwriting better in order to create advantage. If you don't have that, then eventually you're in a game where you're just trying to outcompete these huge online personal lines companies, Progressive and Geico, who are very good at doing what they do.
So speaking of underwriting, how important is it to you that the companies you back produce an underwriting profit, and how quickly do you expect them to do that? How do you prioritize policy growth versus underwriting results?
I think that's the wrong question to ask. I think if you find yourself in the game of saying we'll accept an underwriting loss because we are just because we're trying to grow our top line, then you will grow a bad top line and you'll suffer as a result, and you won't get that back. I think there is so much evidence of that. I'm not sure anyone could believe differently. What you can do though is accept expense overrun because you're growing your business. So we certainly don't expect our startup partners to be profitable in the sort of classical sense of the word, but we expect them to be trying to achieve a target loss ratio which will long term give you profitable customers. So you need to be aiming towards marginally profitable customers. We are quite willing to experiment with underwriting though, and with underwriting experiments, honestly, you lose more than you win, but you learn on the way. And some of our underwriting experiments now are showing loss ratios of 4 or 5 points better than the market. These companies are still not at scale, so they're still not profitable. But in the long run, if you're 4 or 5 points better than the market, then once you're at scale, you're an extremely profitable business. So that's sort of where we aim at.
When you say experiments, is that using a different type of data, or what does
Yeah.
that mean?
So one of the things about underwriting is there's a lot of art in it, which may or may not have been science once upon a time. So we have big, thick underwriting manuals for each of our product, and the reason that something is in the underwriting manual is because it was in the previous generation of the underwriting manual, and you can sort of go back in time, and the question is, what is that question or decision or declination trying to achieve? Why is that in there? And if we can't find data behind it, which happens more often than not, then you at least need to try and find a reason. If you can find a reason, then you look at other things. So we do this in SME, for example, for small business underwriting. You have lots of questions which are aimed at understanding whether the customer is really telling you the truth, whether they're telling you what trade they're in, for example. And we can find better information than we get from those questions simply by scraping the website of the trade. We've built algorithms to understand the right coverage amounts, because one thing you get underreporting of payroll, for example. So we use algorithms now to understand when that payroll is likely to be underreported, and then we simply take the opportunity to raise the premium as a result. And so those things give you better and better underwriting. And the ambition, I think, for insurance over time is to get to a position where you're asking the customer less and less, and you're supplementing what you ask the customer with external data. So in one of our experiments in the UK, we're doing homeowners, and we ask you 2 questions. We ask you your name and your address, and then we do everything else. We have 250 external data sources feeding into that, and some of that is just saves the customer a bit of time, but some actually answers questions better than the customer can answer themselves. So one example, the UK has got a lot of old houses, so one of the questions you have to ask is, how old is your house? Nobody knows the answer to this question. I actually moved about a year ago, and I knew my house was old. There was in the deeds, there's no mention of the age. I did a bit of Googling, and it existed in records in 1840, so I just went, okay, 1823. And I knew I could lie to my insurance company. But most people actually would feel really stressed about that. People, despite despite the stories, people don't really like to lie to their insurance company. But I knew that what the insurance company really wants to know is not when is your house built, but is it really old or quite modern or very modern. And actually, you can get that from Google Maps. If you look on Street View and you just abstract out a little bit and you look at the shape of the road will tell you in which sort of bucket of age your house is. And so we can take out that question, which we know causes people to drop out, and replace it with a little bit of smart searching.
So how mature is the insurtech space right now? When do you expect to see some of the companies you're partnering with, exiting, being acquired, going to the next stage?
I think we're on the cusp of that now. Certainly, we have a couple of partners who are sort of at the $1 billion valuation point, and who certainly could exit. One of our partners turned down an acquisition offer, which was not quite $1 billion, but very, very close to $1 billion. And they turned it down because they really want to go IPO, which is a fantastic ambition. So I think in the next sort of 2 years or so we'll see IPOs. Still, insurance is a long, slow business. I mean, even at IPO, these businesses are not going to have any material scale. I think we're 10 years away from them having really material scale.
And would Munich Re be doing any acquiring itself?
You never know.
So one of the things we were talking about is the different types of insurance that your partners are in, whether it's homeowners or small business. But we were talking earlier about what are the insurance lines that you don't see the insurtech space really tackling yet. Where would you like to see startups, or do you have a wish list for, this is a company I wish existed?
Yeah, we would like to see more in the sort of big commercial space. I think there's real value in that area. We ran some experiments. I mean, it's not really our business. Our business is very much a partnership business. So we wait for brilliant people to come to us with brilliant ideas. But since nobody had, we thought, well, we'll try it ourselves, and that was another mistake. But what we were trying to do was use natural language processing to process large commercial insurance. If you think about the way large commercial insurance works, you have it's sort of a series of filters. You have the insurance manager who knows the company and filters some information about that company to the broker, who then constructs the insurance program, filters some information, passes it to one or more underwriters who then make decisions. If you were DeepMind, you wouldn't do it that way. You wouldn't have these information-free filters in the way you would simply connect the underwriter to the company. You can't quite do that at the moment. There are some interesting experiments out there doing bits of it, sort of like Cytora in the UK. What they're doing in commercial fire underwriting is really interesting. But we'd like to see more, I think, in that space. I think there's probably quite a lot more you could do there.
So do you think that there's a threat to the insurance agents and brokers, those middlemen in the distribution model?
Yeah, I mean, I think there's a threat to everyone, to be honest. The one thing, one market that's interesting to look at is the UK personal lines motor, because it's probably the most extreme market in terms of the market structural development. So you have a look at, there's a company, AA. AA is originally the Automobile Association, the original breakdown guys. But they established a broker, turned it into an MGA, turned it into a carrier, turned it back into a broker. I'm not actually 100% sure I know what it is now, but their customers clearly don't care. Their customers just buy insurance from the AA. So I think if you look at that model, then you say, who's threatened in that? Well, anybody who hasn't got the customer connection that someone like AA has got is threatened in that. The challenge that both insurers and brokers have is that neither of them has a fantastic connection with their customers. The one who builds it will win, I think.
So it's been a tough couple of years for the reinsurance industry more broadly, given there's been a huge number of natural catastrophes. And Munich Re in the first quarter, its profit fell due to some catastrophe losses. So how does that affect digital partners, the broader company performance in terms of the resources that you're given or the goals that are set for the team?
In the short term, it doesn't at all. We're a rounding error. Even if we write 300 million this year, we're still a rounding error for Munich Re. The amount of money we spend is still a rounding error. So we were very deliberately set up as a long-term bet. Partly for two reasons. One, to build a sustainable and growing profit source for Munich Re in the future, in the midterm, but also to help the industry understand the possibilities of change in order that we can also build reinsurance business off the back of that understanding. I suppose what pressure in the reinsurance market does to Munich Re is it proves to the board that they were right to do this in the first place. It shows to them that they and the reinsurance industry need businesses like digital partners if we're going to have a credible long-term future.
So in our last couple of minutes, we're going to play overrated, underrated. So I'll give you a couple of terms, and you can say whether you think they're overrated or underrated, and maybe a little explanation as to why. Cyber insurance.
Underrated. Cyber insurance is going to be huge. It's going to be a standard part of everybody's insurance package. It's going to create enormous loss accumulations. I think the one thing we don't know yet is whether to what extent it really is insurable. But our house view of our experts who know a lot more about it than I do is that eventually it is controllable. But it's going to have accumulations. We will have a $5 billion accumulation in cyber very quickly.
Silicon Valley.
I mean, you couldn't say Silicon Valley's underrated, could you? Unless you'd never heard of it. But Silicon Valley is an amazing place. So I'm gonna sort of duck that. I think there's an astonishing collection of expertise and technology there, and there's a sort of energy about the place. There's also there's a little bit of BS. You see occasionally people invent something that's existed in other parts of the world for 50 years and they've just never noticed. But most of the stuff on my phone came out of Silicon Valley, and that's pretty awesome.
Blockchain.
Oh, complete nonsense. Sorry, overrated. I'm sure there will be a use for blockchain. I've gone from saying blockchain I'm sure is great, but there's no use for it in insurance, to say, in fact, I read something in the Wall Street Journal a few days ago that some people were using it it was being used for trading, which I thought was probably the only possible use case, and apparently it doesn't really work for trading very well either. So, fascinating, great, but I think pointless.
The effect of climate change on the insurance industry.
Oh, I think still massively underrated. We're beginning to see it now in catastrophes. The problem with catastrophe modeling is that it's a statistical process, so everything is to some extent random noise. But I think what we are seeing is parts of the world become maybe not quite uninsurable, but significantly more expensive to be uninsurable, to the point that correctly priced insurance may be unaffordable.
And last one, brick and mortar insurance agents.
I think in the long run, brick and mortar is dead. I think the long run is long. This is also a generational thing. But it seems to me we have generations now who may still appreciate an agency relationship. They may still appreciate choice. I'm not sure they really do, but maybe. But I don't see any reason why those people would want to go into a shop when they don't go into a shop for anything else.
Thank you so much, Andy. Thank you, everybody.
Thank you.